Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. And tonight's webinar is Forex Trade Live Market Analysis. We'll get that into that in a moment. Coming up from me tomorrow will be identifying high probability trading levels using the monthly and weekly candlesticks, the highs and lows, how you can use those. That's tomorrow's webinar from me. And then on Thursday, I've got a live Forex market review. So that's what's coming up from me. Tonight, after this webinar that I'm about to start, Nathan will be doing the quick start webinar at 8. So I'll be finishing around about 7:50. So with that in mind, let's get into it. If you can, please read through the disclaimer. If you're on our YouTube live chat, sorry, I should say our live stream, I can't see the chat, but I've given you a link there. If you want to join us in the webinar, just go to the link, register, and come into the room and you can chat to us. For those in the room, I've got the webinar chat and question and answer box open. Just need to use those if you have anything to ask me. All right, so everybody, please read through the disclaimer before we get into it tonight. And of course, I won't be giving any advice, just analyzing charts. Everybody's responsible for their own trading decisions. Or I'll move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at DXY Securities, and I'm a full-time Forex trader. I've been trading now for more than 15 years, mentoring for more than 10. If you want to contact me, my email is there on screen, duncan.cooper@acy.com. Now, through the week, you can connect with me at our website. Just go to acy.com, go to the Market News tab, or our YouTube channel, ACY Securities Australia, or on my personal handles there, Twitter and LinkedIn, you can connect with me there as well. I'm putting some analysis and some free analysis and training through those handles. If you want to head over there, you can grab some extra content through the week. And we've got our Telegram channel. If you want to get access to that, just contact Nathan and put his details in the chat in a moment. But his email is nathan.bray@acy.com. If you want to get access to my chart layouts and templates, then contact him too. Those are for MT4, the ones I'm using in the webinars. You can get free access to those. So I'll give you Nathan's contact details. If you need to set up a demo account or you got questions about live trading, just contact Nathan. He'll help you out with any of that. All right, that's just going into the chat now. All right, so first up, we'll head over to the news page and just see what's happening from a news front this week. Difficult trading this week. If you're just intraday trading, that's fine. But if you're trying to hold something maybe for the longer term, may well find the market being rather range bound until we get into or past the federal fund rate FOMC statement, okay, on early Thursday morning. So at the moment, tonight, we've got the Canadian CPI data. So that's inflation data. Expecting that to remain rather similar to the previous month, but if that obviously comes in different, that will obviously affect pairs to the Canadian. So dollar CAD, for example, will go through tonight. Tomorrow, we got the Chinese 1 loan prime rate, 5 loan prime rate coming out. That could obviously impact the likes of the Aussie, the New Zealand. Tomorrow, for the UK CPI year on year. That's important because expecting an uptick there, and then the next day on Thursday evening at 9 p.m. here, we've got their interest rate decision for the UK. So two highly volatile items for the pound. 4 p.m. tomorrow, CPI year on year, and then interest rates decision the next evening at 9 p.m. And the big one that the market will be looking towards all week is 4 a.m. in the morning on Thursday. So this time is New South Wales time. We've got the federal funds rate expecting no change there, but inflation did move up last week. So we may well see a change. It's probably 50-50 at the moment. This calendar is forecasting no change, but there could be a change, or there could be a change in the verbiage in the press conference at 4:30. So market's definitely driven by interest rate decisions, statements by, head of the central banks. So we have a few UK, US, and also a little bit earlier on Thursday before the the UK interest rate decision. We've got the Swiss interest rate decision as well, expecting a 25 basis point rise there for the Swiss at 5:30 on Thursday. So those are the big ones coming out. So I'm just going to look at the charts in an analytical point of view. You need to work out how you want to trade as we take into account these news items, okay? All right, so I'll just analyze the charts and you can work out what you want to do from a news front. Now, from a dollar index perspective, go to the weekly chart first of all. Taking out two highs here, we've got this is actually a monthly high that we're heading towards. We're moving up here for 9 weeks. Still very strong. Of course, with the US interest rate decision, we could move up higher depending on what goes on. Two levels to watch if we drop to the day chart is, currently major resistance would be up here at 105.87, and we moved above 104.66. That's the level. That's a weekly high we've moved above to really act as support and any pullback. Now this might not, the dollar index or the pairs may not do too much ahead of Thursday as we wait for that major news announcement, but watching the structure forming over the next week here on the dollar index. If nothing's really changing structurally, I would be anticipating that we may be coming up to test this high. Now, when we come up to test the high, we could obviously fail and falter there and get a sell-off. So, I will be watching for the levels to get touched here and then seeing what's happening. But at the moment, we're in a clear uptrend there, and trying to sell the US dollar, so buying a pair like the euro dollar, I think it's very difficult at the moment because we have this very dominant, strong US dollar at the moment. So trying to book that at the moment, unless something shifts from a news event, probably isn't the best idea, but I'll leave you to think about that. S&P 500, it's a little bit mixed here at the moment, maybe. I've been looking for the potential here on the weekly chart for a lower top to form. We are having a down week to this inside week, so potentially a lower top up here could be forming now. That's at the 79% level of this major range. So are we topping out up here at the 79% level? We're holding at this. This is a day chart resistance level or support level. We're just underneath this level here. But it is a bit like a higher bottom here, higher top scenario, you could say here on the day chart, but we are having a week down from the previous week. So I think if we trade below 44.30, that's a clear signal for me that this day chart trend is clearly trading back to downside in line with what is looking like a lower top forming on the weekly chart, possibly topping out up here at 45.31. All right, so I don't think it's quite 100% proven yet that this is moving to the downside on the daily, but breaking below 44.30, I think, would be the key. All right. All right, so excuse me one moment. I'm just checking something technically. I just need to pause my screen a moment. All right, I'm back. Hopefully my screen is working all right. All right, so S&P 500 dropped back to the weekly chart. We could be forming a lower top here. Now, if we form a lower top here, and we do break below, 44.30, that could be the start of, if we drop back to the weekly chart here, a long-term move down here. All right. If that US dollar strength that we're seeing, that 9-week strength is going to continue for the rest of the year, we could well be seeing, if the Fed comes out and says, well, maybe they raise interest rates, or they just say we're going to have prolonged interest rates at high levels for a prolonged amount of time. And if they're referencing that potentially there's going to be some more hikes this year, even if they don't hike this week, then that's going to be negative for the stock market as well. All right, let's drop into euro dollar. Now, euro dollar last Thursday after the webinar, we did raise interest rates, which wasn't expected. but the market didn't like it. The Eurozone may have said that we could be at the limit now of interest rate rises, and the market didn't like that. So it dropped down to test this low over here. Now this low over here is this, on a monthly chart here, it's a monthly low area here. And it's a little bit more easily seen on the weekly here. We traded down to there. Now, there is a possibility that we hold here to move all the way back up the range, but at the moment, the day chart at the moment is still showing you lower top, lower bottom. This has been working really well to support and resistance. See how it came up here and held at resistance, broke support, became resistance, and the same thing could be happening here. We're pretty much trading at the level right now. 106.86 is the resistance level to watch. So we're trading up. Is this where the market's going to hold to continue the move down? We did the same thing here. Traded down, traded up, held to trade down. So is the same thing happening here? Now I just want to monitor the 4-hour chart and the range of last week. That's the high last week to the low last week. Now we are holding at the broken support level, but I think through the week there is the potential that this could pop higher. And the levels I would be watching, because there's a bit of an imbalance here from Thursday that hasn't been filled. Just highlight it in. And there's a potential that we could come up and fill that level. Now today, yes, could be looking for a short trading down from 106.86, but later in the week we could come up to 107.15 to 107.38, the 62 to 79% fib area, and fill this imbalance as the news gets released later in the week when we have a bit of volatility. All right, so if we are below the low of last week come the FOMC, then I wouldn't be looking at the high levels. But if we're still relatively close to this resistance level, we haven't committed to the downside too much, we could go up to those higher levels. So at the moment, if we drop to the 15-minute chart, the level to be watching at the moment is really from 106.86 up to the figure up here. We've got 1, 2, 3, this figure, and then all these tops here is the area where the market's getting sold down from. Don't forget where the trend is. Its trend is down. So, if the market could get back up to there, into that area today, could be it's already offered 2 selling opportunities if you're prepared just to trade up here. So I'll be watching up there if you're looking for a sell opportunity at the moment, because that's clearly where the sellers are holding the market, just underneath 107, okay? Euro yen. Now, to my daily chart, I did take this line off, but it's still doing its thing. This weekly high over here, 157.99. We dropped back below it last Thursday after the interest rates, and we're coming back to it. Is that going to offer resistance to trade down? Like we're seeing on the euro dollar at the moment, broken level of old support being resistance. And as well, if we monitor the 4-hour chart here with the range of last week, we're getting up to, it's not quite the range of last week because the range of last week's there, but I'm just going to use that low there because it's the last part of the drop. All right, we're just coming up to fill this imbalance in here that got formed. And pretty much the start of it overlaps with that 157.99 level. So we could come up to the 79% level, but for me, I will be watching to see if we can come up into 157.99. At the moment, last 2, 4, 5 4-hour candles here and one back here, getting held at 62 level. So whether or not you can quite get to 157.99, I'm not quite sure, because it's getting held at the 62 level. But, up here, you can see it's very flat and range bound. Up there would be the level I'm watching. All right, 157.99 to 158 up there, just above the high of the day at the moment. If we can get up there, you may come under some selling pressure there. Well, then, back to the 4-hour chart here. Last week, sold down. Looking at this to be corrective for, are we going to be moving down this way through the week? All right, so this is the sell zone up here. All right, from one, the largest sell zone will be from 157.88 to 158.21, those two fib levels, but it's just getting capped a little bit short of the 157.99 level there. So you can monitor there for the opportunity to sell. Are we going to see a downtrend continuation pattern there on the euro yen? All right, let's get into euro pound, which getting a mix of trends here because the weekly trend, the high time frame trends are down, monthly, weekly are down. This is the area that I put in there last week. We've hit that level 3 times now over the last week on the trading days. The 79% level of the weekly range. If you drop to the weekly chart, we have a lower top to lower bottom, coming back up to the higher end there, where we held before moving down last time. So yesterday trend is up here, but the weekly trend is down. So is this the conclusion of a corrective move back up the range? So really this is a 79% trade. We're at the 79% level right now. If you like the euro pound, wanting to trade the higher time frame trend, which is down for the next leg down, selling at the 79, stop above the high, and you're really looking, selling, stop above the high, looking to target the 0 level or break down and through to the 127 extension. Now, of course, it's a little bit dangerous with the pound news coming up, but in terms of a pattern, you have a 79% retracement pattern there. Are we moving back down to the downside based on the weekly trend there? Okay. Now, of course, if you don't want to trade here, stop above the high, then you could be waiting for something to form on a lower time frame. So you can start to watching this 4-hour chart to start to break down, which it's not proving a downtrend here at the moment, but to get down to a lower time frame like a 15, you could be looking for a trend line break, which hasn't yet occurred, but you may well see that today. And then you can get a tight stop. And does it start to break down to the downside from that 79% level? Okay. All right, let's head into the Aussie yen now. It's got a bit of a bid on it. We had the monetary policy statement come out today from the RBA. Or we had the, let's just head back to the news so I can get the right word. We had the monetary policy meeting minutes released today, which kind of said that in the last meeting, they ummed and ahed about whether they would raise interest rates. Potentially they were going to, but then held. All right, so there's still a frame of mind at the RBA that they may well still need to raise some interest rates if need be. They're not really giving you that total tone that the markets, well, the RBA's now prepared to keep interest rates still. We're not quite, I don't think, at the peak. Not giving us that full conclusion that we're at the peak at the moment. So a little bit of a bid. Now the day chart here on the Aussie yen, we're trading inside Friday's rejection candle. So there's still the potential that we are topping out here maybe. And the thing I'm monitoring, I drop to the 4-hour chart, is really the range of last month, which is, we got my charts, it's that high to that low. We're trading inside the range of last month's candle. All right, just a fraction above the 79% level at the moment. If you just drop back to the day chart, as well here to the left, you have a high point here. I could draw that in because it is meaningful, 95.37.8. We've actually traded up to that level today. Now, it's not a head and shoulder pattern, but this is some form of resistance in terms of a pattern. I mean, you could say that's a left shoulder. You could say we kind of have a double top, double head here, and you could class that as a potential right shoulder. It's really just you're back at the sell zone, sell side of resistance there from previous times of trading, and most definitely this is where we could fail. You can see Friday heavily rejected. So it's being held at 95.37, that resistance to the left. Very high up within the range of last month. All right, we're getting above a couple of day resistance levels here at the moment. We've been above and below, but today we're above. But, you know, we rejected and fell down Friday. Potentially, we could be, you know, if we draw a range, there's the rejection on Friday. We're coming back up inside the candle of Friday. 79% level overlaps with that day resistance level at 95.38. This could be the level to watch. For the opportunity to sell down from up there. For then this pair to fall over to the downside. All right, so you know, if you're wanting to trade ahead of the big news announcements this week, that could well fail up there. And another big news announcement on Friday is we've got the Bodge monetary policy statement. So that's obviously going to affect the yen pair as well. So if you're prepared to engage and hold a position, those news items are definitely in the forefront. So I would be watching up here at 95.37 at the moment. You know, do we come up close to now? Fail. That 79% level is 95.38. Do we fail up here at the 79% level to trade back down? Like I said on the day chart, big rejection candle on Friday, and really Monday's trading and Tuesday's trading is just inside the range of Friday. All right, so there's a possibility of just trading back up inside the range to fail today to trade back down. To the Aussie. Now, the Aussie is just perfectly failing today at monthly resistance, 64.58. Just drop to the weekly chart. It's going to be, you know, we have a lower top form there to move down, but we're getting a bit range bound here, and just going to go back to the day chart. Previous kind of double top pattern, it hasn't met its target. It's a little bit short, but as well, drawing the fib across the pattern here. We're at the 162 level. We don't have to move down to the 200 level. We're definitely getting some support down here. We put a weekly support low in here too. So we're rather sideways here. And at the moment, as we're waiting for the US news, we are holding at 64.58, but I think it's worth considering that, you know, we've had this double top, then we've had, you know, a long run down. We could see a corrective rally up from high to low of that range there, up this way. So the thing to consider as the news comes out this week is that whilst we're holding at the 64.58 level at the moment, and I think at the moment you could be looking to trade down from that level, but when the volatility news comes out, if it's US dollar week, then let me get my fib off here. We could be monitoring this range here for a corrective rally back up this way. So it's worth, you know, 62 levels at 66.89. So we could see a move up to 67 if the US dollar, you know, US dollar has been moving up 9 weeks. This has been moving down probably 9 weeks. It's due a rally. Doesn't change the higher time frame trend, I don't think, but it is due a rally if we get some news that can create it. So don't be surprised to see this move maybe after the FMC above 64.58. Headed then though, we could well remain, you know, below that level. So you can be watching today. If we further come up to 64.58 and want to hold, then you may well be able to, you know, see some form of trend line breaking here that you could trade back to the downside. And if that unravels nicely, maybe you can hold it through the FMC, but we may not unravel nicely. We may just stay rather range bound as we lead into Thursday. But at the moment, the key level is at 64.58 to trade down from. This comes up here. This will help the Aussie yen just maybe come up to that 79% retracement in your daily resistance up here. All right, getting into the pound. Pound's been working nice to support resistance too. So at the moment, just from a day chart perspective, support and resistance has been working great. We had broken support here. Came resistance. We moved down through support last week. Actually, on Friday, we came up to tag it. All right, and we're down to day support here. So the broken support level was this area over here, 124.48, which is monthly support that was becoming now resistance. We may well see that retested this week. So that would be the level to look for a short. So then can we move down this way? It's been working very nicely to broken support becoming resistance. So I would expect at the moment the same thing until we, hit some news releases or even a news release. If price is down here, a news release could spike it up to 124.48, and that could be the selling level for the week. All right. So that's what I'll be watching for here on the pound. Now, it's worth noting, if we go to the monthly chart, trend of the monthly chart here is up. Yes, we're having a pullback. All right, and I'm going to drop to the weekly chart here. There's a low here on the weekly chart, which if you do some fib work from monthly high to low, monthly low to high. So back to the monthly chart, it's this low up to high. We're measuring the pullback. This weekly low here overlaps perfectly with the 62% level. So we have 62% low at 123.14, weekly support at 123.08. That would create some form of double bottom on the weekly chart if we hit that level. Now, whether or not that will hold, we have been obviously having a very nice sell-off. But if we see a nice rejection this week at that level, it wouldn't be a stretch to see a reversal from that level back up. And maybe a complete reversal back up this way. All right, we'll have to wait and see what the UK CPI data brings, first of all, on Wednesday. But, if we move down to 123.14, down to 123.08, maybe the 123 level, we get a good strong rejection down there, maybe it would be time to look to the long side. Until we get to that level, though, I will just be looking to the short side, and I'll be watching up here at 124.48. So just going to get rid of that fib. And just monitoring the range of last week as well. If we get a rally before we move further down, we have just traded through last week's low, so I'm just going to drop it down to the lowest point. And, we could come up to any one of these points through the volatility of the news. We could, as I said, come up to 124.48. I'm not interested in trading this to the upside. I'm just waiting to see if the volatility of the market can pick it up to that level. And we could obviously come up to the 62 level, 124.79. Could even come up to the 79% level at 125.09 as well. We have an imbalance in here from Wednesday or Thursday last week that potentially needs to be filled, and that lines up with a 62% level there at 124.79. So I'm just waiting for the option to sell a rally at the moment. Can we come up to a level that I like? Do I see that then price nicely turn around? Okay. Not looking to sell at the low levels of last week, and I'm not looking to go counter trend at the moment. If we do get down to that 123 level, I might have a look at trading a reversal back up, but at the moment, everything's really down. All right. And you can see at the moment, it's very consolidatory here on the 4-hour, which, doesn't make life easy. This 15-minute chart's going nowhere at the moment. It's about a 20-pip range, 25-pip range at the moment. Might not be able to get above 24. When you look at the 15-minute chart, you can see yesterday, 124 once, twice, 3, 4 times. So if you go to the high of yesterday, down to 124, then that would be the area to look for a short today if we can get up there. All right, don't. There's lots of lows down here in the 15-minute chart, so don't try to be selling through these lows. Look to sell these highs that have been forming up here. This may not do too much until CPI Wednesday. All right, so trying to trade the top of the range there with the trend, trading back down. All right, getting to New Zealand yen. Has been moving up a little bit like the Aussie yen. And just want to tie things off. It's just has started to break out of that range that it was holding in. And I'm just monitoring, like, this is the monthly range here on my 4-hour chart. All right. And I can go to the day chart. So this whole range here is what we've been trading in. We are definitely going to the upside at the moment. Now we've got weekly resistance. So in fact, I think this is monthly resistance. Let's just drop to the monthly chart. That's a monthly high there. So it's monthly, weekly resistance up here. That's the weekly high there, monthly high. Heading back up there. Now, you could say this is actually an uptrend on the weekly chart, but let's just have a look at all the time frames. We keep failing at all these monthly highs to the left here. 1, 2, 3. Okay, and we're just trading within the range of this month, which is July's month. So we're actually trading within July's month and August month. All right, very range bound. It doesn't seemingly have the capacity to trade and hold above these highs. So that high there at 88.16, just there would be a level I would watch closely. All right. Now we could just look at the fibs from that high to low. That's the first range. Last month's range from the monthly candle perspective is just here. I like that range better because the 79% level is very close to the monthly high over there to the left. So for me at the moment, it's going to drop to the 4-hour chart, but up here, I'll just be watching up there to see whether we can get a failure up there at the 79% level. Now, if you want to trade north, then I think on the 4-hour chart at the moment, you need to look for a pullback within that 4-hour trend there, if you want to look to trade to the upside. Look for a 62 or 79% pullback. All right. But for me, I'll just be monitoring up here. And if I just squash this in a little bit, I know once I squash it in, it's going to look very small, but there's a bit of an imbalance here that hasn't been filled still, which is pretty much top of the imbalance is at the 79% level just in here. All right. And as well on the 4-hour chart, you've got all these highs to the left over here. So this area up here at the 79% level, 87.98. And then the monthly resistance at 88.60 looks like a very good level for the market to fail at if we could get it up into that area. All right, so at the moment, I'm just watching that pair up in that zone at the top there. I'll just leave that as that, and we can see what it looks like on Thursday. New Zealand dollar is looking very similar to the Aussie. We rather consolidatory. The double top up here. In terms of the fib, from the double top, we're at the 127 extension. And again, depending on what the Fed news does, we could see, like I was saying on the Aussie, we could see a corrective phase back up. This long-term move down, we could see a move up to 62. And then hold to put in a lower top on the big scale to move further down. All right. But at the moment, it's just consolidating here. And the key level, if you go to the monthly chart, is we're below this monthly low, which is a weekly low. We do have a lower top, lower bottom on the weekly chart. It's just the ranges are getting smaller here at the moment. We could just simply hold within this weekly range, this smaller range. I want to come up. I'll just be watching the top of the range. 79% level, 58.81, 58.85. That's the level to watch. Trying to get yourself set. That would be a head and shoulder pattern here. Left shoulder here, head, right shoulder, if that could come together. All right, so that could come together this week for sure if we spike up with the FOMC. So it's definitely worth watching. New Zealand is one of the weak currencies at the moment. Okay, I think I can't quite recall now what the inflation is, but they have seriously risen their interest rates, I think, to what is it now, 5.5%. Their inflation figures are falling. So expectation maybe at some point interest rates could come down, but this is what, in New Zealand is one of the weaker currencies at the moment. So looking up in this area here would be ideal. 59.81 to 59.85, we could see a right shoulder form there. There's your head, and there's your left shoulder here. All right. And there is just in here an imbalance in here still. Top of that imbalance is the area that I'm looking at. All right, dollar Canadian. We've got their CPI data coming in. Now, last Thursday, I said maybe we could hold here for an inverted head and shoulders, but that hasn't come together. And the day chart trend has broken to the downside. So the bigger pattern, and I was obviously, before this potentially maybe offering support here, the bigger question was up here, the failure up here, and all this resistance to the left. And it would seem that the monthly structure here on the dollar Canadian is in play. We could be putting in a lower top here. We have lower top, lower bottom on the monthly. Are we further putting in another lower top to trade down? So if we go to the weekly chart, we can see this. There's a little bit more clarity. And, there's the monthly move down. Correction. We're failing at these weekly highs here as well. Previous resistance failing there. Are we seeing a move that way? It's looking very much like that. If the CPI data comes out very positive for Canada tonight, that would certainly influence maybe a further interest rate hike on the Canadian side, which would certainly maybe be positive for the Canadian and not positive for the US in terms of the pairing. So, mapping things out, that's how it looks at the moment. I know it's kind of inversely correlated to what we generally see when we look, say, maybe looking at the Aussie dollar, because the Aussie dollar is in a monthly downtrend, and so is the dollar Canadian. And the dollar Canadian also has some other factors going on as well. We have oil, which has been, here's oil on the weekly chart. I can bring it up. Very strong weekly uptrend at the moment. So that's positive for the Canadian dollar. So that's one of the drivers of the Canadian at the moment. All right, so now we haven't really had a rally since we topped out up here. So what I would be looking for, unless we get very negative moves, we usually get a pullback. So we haven't had a pullback within this downward phase that's starting to unfold here. So whilst we have these bigger overall fib that's projecting the monthly target, we have this movement down here. So this was the uptrend. So what might happen here is, first of all, price moves downwards to the 127 extension here. All right, first of all. And then we get a rally. So I'd be watching for that, maybe for the market to have we've almost touched that level. So we could touch that level today. But then what I'll be monitoring is, assuming that's a low, but if it's not, I just keep moving the fib down, is monitoring this fib now for a rally. This has had 1, 2, 3, 4, 5, 6, 7, 8th day really down in the whole move. I don't want to be selling it on the 8th day or the 9th day or the 10th day, because there's now the likelihood that this will have a day chart corrective phase and give you the opportunity then to sell the lower top for me. And we could come all the way back up to 136.40 and form a left shoulder head right shoulder here. So, you know, left shoulder, head, and a right shoulder could come in there. Of course, then that's going to need a healthy rally too. But looks like it's breaking to the downside from the higher time frames. It should have a rally. Watch for the rally to occur. Can you set yourself up for a long-term move down? You can see here, this move down came all the way back up here. So this can definitely come all the way back up here to hold, do a final failure. So it'll give you a lower top to form, all right? So that's worth just monitoring now at the moment on the dollar CAD. All right. Just got to monitor my time. I've got to finish at 7:50 tonight. There's another webinar coming up. Dollar franc, continuing its upward move. We could, whilst I'm actually monitoring this weekly range, but we do have, when we monitor the monthly here, a much larger range. Right, we're at about the 50% level. So 62 levels at 9,100. So we could be seeing a little bit more of a corrective move up. That 9,100 level, we could definitely get there to, not today, but maybe this week. We've obviously got the Swiss interest rate, US interest rate decision as well. We have 90.84 there. This is a level to watch through the week where the market could, you know, get to and top out at. Monthly resistance, 90.84, 62% level. All right, I will just be monitoring that level. Difficult to trade this pair at the moment with two interest rates coming out, Wednesday, Thursday. Sometime, you know, is it Wednesday, Thursday? Let me just double check. I think it may be Thursday. Where's the Swiss one coming out? All right, Swiss is Thursday. So we got two on Thursday, early morning and then early evening. US and then the Swiss. All right. And then there's also the range of the weekly range here. 79% levels at 1919. All right, but high time, you know, the high time frame trends really are down. This is corrective at the moment, and we're quite long in the tooth here from the corrective measure, so we could see this top out. So I'd be monitoring for a top out at the moment and just leaving that alone and monitoring where it can top out at. We'll be monitoring the bigger range as we've got these two interest rate decisions coming in the week. So just watching to see if we can get up to this area here and then what happens. All right. Dollar yen. Now, we always got the US interest rate decision. We've got policy decision on Friday from the Bank of Japan. Will they change any policy? The big problem I have with the dollar yen at the moment is at such high levels, and the level that it's at the moment, it's holding at this historical high, 1998. I think it is August 1998. I think that high is, and 147.68 is the number. We're trading at 147.71, so we're pretty much at that high. We did false break it last year, and we're at it right now. So it is a very historical level that the market is holding at now for the last 2 weeks. You can see the last 2 weeks of candles. It's worth knowing where the 79% level of that drop is as well. We're just a little bit above it at the moment. And this price structure on the day chart is holding to the upside. We have higher top, higher bottom. But I think I mentioned this last week, looking at the day chart with the MACD on, here it is. There's a possibility of some negative divergence here. Whilst price is high bottom, higher top, this MACD is actually separated a little bit to the downside. So I'm a bit concerned that we're at very high levels and we could maybe see a top out up here. So I will just be watching for a top out at the moment on the dollar yen, not seeing anything to do. I would like a clear structure change, clear price action, signal on the data chart to confirm maybe a reversal. And I'm not interested in buying at such high levels on this pair. I would be interested if price could pull back. This is the data chart. This is a weekly high here at 145.06. I'd be interested at 145.06 if it could pull back to this area or this zone. You see, we dipped below it in this area here, but this is where we're getting support. And at such high levels, you can just be patient and wait to see if price could come back to where the buyers have been holding the market. Because I don't want to be selling at such a historical high point. I don't want to be buying at such a historical high point. This shows a very clear candlestick pattern up here, or we start to see a lower top, lower bottom forming from and move down from this area. Quite possibly, we're looking for the opportunity to trade down. We could be seeing a fair hit at 79% level of the larger range here for maybe, can this top out up here for a move this way? Now, maybe for that to happen, we're going to have to see the US dollar sell off. So I don't know whether that can happen, but it could happen if the Bodge changes policy or they start to want to come in and intervene. We could certainly see some selling pressure. Whether we can come all the way down here is another matter, but we could certainly see some short-term topping out process in that area for sure. So it's worth understanding the position of the market at the moment and why it could top out. We'll just have to wait and see whether it can. All right, let's drop into gold. We've got 3 minutes, which is now, it's not able to come down and fill that unbalance over here. I'm just going to take these off at the moment. Not able to hold below this old weekly high over here to the left. All right, and it's putting in a bit of a minor high bottom here. We have a lower top, higher bottom. This could go either way this week with the news coming out. It's not prepared to commit to the downside quite clearly, and it's putting in a higher bottom, but it's putting in a lower top. So, that's becomes a mixed affair. The day chart trend is moving to up, but, if you're wanting to trade, you'd have to monitor the 4-hour chart at the moment. You have a higher bottom to top there. So you can monitor this range for a pullback within to 79% level. And then can it turn around? But, of the range that we've been now forming over the last 2 or 3 weeks, that range there we've been forming. That's the lower top and that's the higher bottom. From the weekly chart here. Lower top, higher bottom. So that's the range now that we're trading within. There's the 4-hour. Just going to get rid of that fib there. All right, so that's the range that we're trading within. Could go either way this week. Depends. The buyers are obviously holding it to move up, but as we get into the 79% level, up to the high, this is where the sellers are going to come in. So we're getting close to the sell zone at the moment. I'll just be watching up here personally if I want to trade this. What happens up here? It's going to be difficult with the FOMC, and looking at pairs to trade. Some pairs are very clear in trend, like the euro dollar, pound dollar at the moment. This gold isn't that clear. You got a lower top, higher bottom on the weekly chart. So which way is it going to go? When it's not clear, it's not clear. So you got to know which pairs to pick your battle on. So as we're getting closer to the sell zone, I will just watch for the sell zone up here. And do we fail up in the sell zone at the moment? Okay, you've already missed the buy zone, which was down in this area here. So my alarm. So watch the sell zone. Can it fail up there? All right. Any final questions? Azu, you're saying possible head and shoulders. What pair are you saying that's on? Was that a previous pair I was looking at? Were you looking at dollar yen? Not sure what pair you were. Dollar CAD. Yeah, on the dollar CAD, where I was saying that we could have, if we rally back up here, we could have a left shoulder, head, right shoulder affair. All right. Right, so big mix there on gold at the moment. I would look to something that's a little bit clearer. And for a number of months now, it hasn't been the easiest, I don't think, gold to trade. All right, I'm going to have to wrap it up there. Tomorrow I'm going to go through, as I was saying earlier, from me tomorrow on the webinar front, I'm going to be going through high probability trading levels using the monthly and weekly candlesticks. So I'm looking at the highs and lows of those weekly candles to trade up and down from. Okay, so I'll take you through that. Coming up, if you want to join Nathan, he's coming in shortly at 8 o'clock to take you through the quick start strategy. So if you'd like to have a look at that, just come over to the webinar page and register, and he will love to see you, I'm sure. All right, other than that, I'm going to have to call it an evening. So thanks very much for your company this evening, and I look forward to seeing you in the week. Thank you.